12 hours ago, Donald Trump stepped up to the podium and announced a 2-week ceasefire with Iran. The bombs would stop. The Strait of Hormuz would reopen. 40 days of escalating conflict were supposedly coming to an end. Wall Street exhaled. Oil crashed more than 10% in minutes. Stock futures exploded higher. Every headline screamed the same message. Peace at last, crisis over, relief rally underway. And then something completely unexpected happened. Gold surged 3%. Silver exploded nearly 7%, ripping straight up to 3-week highs at $77 per ounce. While CNBC was busy celebrating the end of the war, China quietly added another 500,000 ounces of gold to their official reserves. Wait, that is backwards. That is not how markets are supposed to work. When wars end, gold is supposed to fall. When fear disappears, safe haven assets get dumped. When peace breaks out, you sell protection and buy risk assets. So why are the biggest, smartest players on the planet doing the exact opposite? Because they know something the headlines are not telling you. Something that completely changes what happens next. This ceasefire is not peace. It is a setup. And the charts I'm about to show you prove exactly why gold and silver are primed for the biggest move of this entire bull market. Welcome back to the hidden economy. Smash that subscribe button and hit like right now, because what I'm about to break down could completely reshape how you think about your money over the next 12 months. Let's get straight into it. Let me start with what actually happened in the last 24 hours, because the mainstream narrative and the cold reality are two completely different things. President Trump announced a 2-week ceasefire with Iran. Not a peace treaty, not an end to the conflict, just a 14-day pause. In exchange, Iran agreed to allow limited traffic through the Strait of Hormuz. Negotiations are scheduled to begin in Islamabad on April 10th. The market reaction was instant and violent. Oil plunged more than 10%, briefly dropping below $100 a barrel for the first time since the war started. The dollar weakened almost 1% against major currencies. Global stock markets surged on what everyone immediately labeled a relief rally. And gold? Gold ripped 3% higher in a single session. Silver went vertical, surging nearly 7% to $77. This makes 0 sense on the surface. Peace should crush gold and silver, not launch them higher. So why is the smart money aggressively buying protection even on ceasefire news? Because they know this is not peace. This is a temporary pause. And what comes after this pause could be far more dangerous than what came before. Let me show you why. First, look at Iran's actual demands. The 10-point proposal that supposedly formed the basis of this ceasefire. Iran wants full control over traffic through the Strait of Hormuz, coordinated directly with their armed forces. They want the United States to withdraw all combat forces from every base in the region. They want every sanction, primary and secondary, lifted immediately. They want full financial compensation for war damages. They want all frozen Iranian assets released, and they insist on continuing uranium enrichment. Let me be crystal clear, there is exactly 0 chance the United States accepts these terms. This is not a serious negotiating position. This is a wish list designed to fail. Traders have already coined a term for this pattern. TACO, Trump always chickens out. Threaten destruction, extend the deadline, claim progress, repeat. We've seen this exact movie play out multiple times in recent weeks. So here's the real question. What happens in 2 weeks when these negotiations inevitably collapse? What happens when Iran refuses to surrender control of the strait? What happens when Trump's patience finally runs out? The bombs will start falling again. Oil will spike. Fear will flood back into the market. And everyone who sold their gold and silver on peace headlines will be scrambling to buy it back at much higher prices. The smart money isn't waiting for that moment. They are positioning right now. Drop a comment below and tell me, did you buy the ceasefire story, or do you see this as another fake out? I read every comment and want to know what you're seeing. Now let me show you something most people completely missed while staring at the ceasefire headlines. Something that reveals exactly what the largest players on Earth actually think about the future of the dollar. China just added to their gold reserves again. In March alone, they increased official holdings to 74.38 million ounces. But the real story is in the bigger picture. Look at the 6-year chart of China's gold holdings versus their U.S. Treasury holdings. The white line is gold, steadily rising. The orange line is U.S. Treasuries, collapsing. In 2020, China held over $100 billion in U.S. Treasuries. Today, that number has dropped to around $680 billion. They have dumped more than $400 billion in American debt in just 6 years. And where did that money go? Straight into physical gold. This shift accelerated dramatically after 2022, when the West froze half of Russia's central bank reserves. China watched it happen and made a decision. Never again. They are de-dollarizing at full speed, and gold is their primary weapon of choice. If this is making you rethink your own portfolio, hit that like button right now. More people need to see this. Now let me show you the chart that changed everything for me. This is a 53-year chart of gold. And it reveals something absolutely stunning about where we are in this cycle. Since Nixon closed the gold window in 1971, gold has gone through 3 distinct bull phases. We are currently in the 3rd and final phase. And if history is any guide, this phase could take gold to levels that most people still think are impossible. Look at the first bull phase. It started right after Nixon's decision and culminated in the 1980 blow-off top when gold hit 850. Then came a brutal 20-year bear market. The second bull phase began around 2000 when gold broke out above its long-term resistance and eventually peaked near $1,900 in 2011. Then another long consolidation that lasted over a decade. Now look at where we are today, April 8th, 2026. Gold has broken out of a massive cup and handle pattern that took more than a decade to form. It is riding a red parabolic curve that veteran analyst Grady has been tracking for years. As long as price stays above this curve, the path of least resistance is dramatically higher. The annotation on this chart says something that gave me chills. This red parabola line fits perfectly, and the time frame makes complete sense for a move like this. What move? Look at where the parabola projects. It curves up exponentially as we move through 2026, 2027, and 2028. This is not a linear move higher. This is a parabolic curve that could take gold to $5,000, $6,000, $7,000 or beyond. Stay with me, because this next part is crucial. In a resumed bull market, there is always an X resistance until there isn't. At some point, the resistance levels stop mattering, the sellers get exhausted, the buyers take complete control, and price goes vertical. We may be approaching that moment right now. The 6-year weekly chart shows this even more clearly. Gold has been forming one consolidation pattern after another, stacking green patterns on top of each other. Each consolidation resolves higher. Each breakout leads to another run. This is the signature of an incredibly strong bull market. The recent pullback from the highs around $5,600 backtested the red parabolic curve and held. That is exactly what you want to see in a healthy bull trend. So the curve is now acting as dynamic support. As long as it holds, the structure remains strongly bullish. Grady called this setup back in 2023 before the big breakout. He's been tracking this move for years, and his message has been consistent. For heaven's sake, do not miss this historical bull market. I'm not going to tell you what to do with your money, but I am going to tell you what the charts are showing. And right now, they are showing a setup that only comes along once or twice in a lifetime. Now, let me show you something even more explosive, because if you think gold's setup is impressive, wait until you see what is happening with silver. This is a 40-year chart of silver priced against the NASDAQ 100, silver versus tech stocks. And what you're seeing here is one of the most compelling setups in any market right now. Look at the left side of the chart. Back in 1990, silver massively outperformed tech stocks. Then the dot-com bubble happened and tech went on a historic run while silver collapsed in relative terms. The ratio fell from extreme highs all the way down to historic lows. See that bottom? That represents tech stocks at their most expensive relative to silver in 40 years. The annotation says, stock market extremely extended. Now look at what is happening on the right side. Silver has broken out above the blue trend line that has been containing price for years. The analyst says, a reverse symmetry move is quite likely as general equities move into a secular bear market, and precious metals continue their now resumed secular bull market. Here's the stunning part. See where the red arrow projects? If silver returns to its old highs against the NASDAQ, it would mean silver outperforms tech stocks by 30 times. Not 30%, 30 times. I'm not saying silver is going to 30x against the NASDAQ, but even if it does a fraction of that move, we are talking about generational wealth creation for people who are positioned correctly. And look at the RSI at the top of the chart. It just broke above the resistance line for the first time in years. This is confirming the breakout in the price ratio below. Silver is not just going up. It is starting to dramatically outperform the most popular asset class of the last decade. Tech stocks, the Magnificent Seven, the AI darlings. Silver is quietly beating all of them on a relative basis, and almost nobody is paying attention. Everyone is still obsessed with Nvidia, Apple, and Microsoft. Meanwhile, silver just ripped 7% in a single day and is trading at $77 an ounce, while the physical market tightens and central banks keep buying. The analyst's message is crystal clear. These market opportunities are extremely rare, maybe once or twice in a lifetime, so make the most of it. Quick question. How many of you even knew silver was making these kinds of relative moves? How many of you have any real exposure to precious metals at all? Drop a comment and let me know. I'm genuinely curious what the audience allocation looks like. And if you are getting value from this breakdown, make sure you are subscribed. I'm covering these markets every single week, and you do not want to miss what comes next. Part 3. Why the ceasefire changes nothing. The generational setup. Word count 105. Now let me connect all of this back to why the ceasefire does not matter for gold and silver, because this is the key insight that ties everything together. The ceasefire is a 14-day pause in a conflict that has fundamentally changed the global financial order. Even if peace magically breaks out tomorrow, the damage is already done. Central banks have seen what happens when you hold too many dollars. They get frozen, they get weaponized against you. Russia learned this lesson the hard way. China is making sure they never have to learn it. The de-dollarization trend that accelerated during this conflict is not going to reverse because of a 2-week ceasefire. The gold buying by central banks is not going to stop. The shift away from U.S. treasuries is not going to pause. If anything, this conflict has accelerated trends that were already in motion. It has proven to every country on earth that the dollar is a weapon that can be used against them at any moment. And the only real defense is to hold assets outside the Western financial system. Gold is that asset. It has no counterparty risk. It cannot be frozen by sanctions. It cannot be printed by central banks. It cannot be devalued by government policy. It is the only truly neutral reserve asset on the planet. This is why gold surged on ceasefire news, because the ceasefire does not change the fundamental story. The war accelerated gold's role as the ultimate safe haven, but it did not create that role. Gold was already on this trajectory. The charts were already bullish. The central banks were already buying. The war just made everyone pay attention. And now that they are paying attention, they see what some of us have been seeing for years. A 53-year setup reaching its climax. A third and final bull phase that could dwarf everything that came before. A parabolic curve projecting prices that most people cannot even imagine. This is why the ceasefire changes nothing. The market reaction tells you everything. Gold did not fall on peace news. It surged. Silver did not tank, or it exploded higher. The market is telling you loud and clear, the buyers are still buying. The trend is still up. The breakout is still confirmed. Let me tell you what the next 2 weeks probably look like based on everything we have discussed. The negotiations in Islamabad will begin with optimism. Both sides will claim progress is being made. Headlines will talk about constructive dialogue and working toward a framework. Markets might even rally a bit more on the hope. But behind closed doors, the reality will be very different. Iran is not going to give up control of the strait without massive concessions. The United States is not going to withdraw from regional bases, lift all sanctions, or allow uranium enrichment to continue. The gap between these positions is not bridgeable in 2 weeks. It might not be bridgeable in 2 years. At some point, probably around day 10 or 11, leaks will start appearing. Negotiations hitting obstacles. Key issues remain unresolved, both sides far apart on critical points. The market will start getting nervous. And then day 14 arrives. Trump has to make a decision. Extend the ceasefire again and look weak, or resume the bombing campaign. Based on everything we have seen from this administration, I expect dramatic action, not quiet extension. When the ceasefire ends without a deal, and I believe that is the most likely outcome, the war premium comes back instantly. Oil spikes, dollar weakens, gold and silver surge to new highs. But here's the beautiful part for gold and silver bulls. Even if I am completely wrong, even if somehow a lasting peace emerges from these negotiations, the structural bull case remains fully intact. China is still de-dollarizing. Central banks are still buying. The 53-year pattern is still valid. Silver is still breaking out against tech stocks. Peace might slow the move. It will not stop it. Now let me give you some price targets so you understand the potential here. Goldman Sachs has a gold target of $5,400. JP Morgan is calling for prices above $5,000. UBS is at $5,600. And one technical analyst using Fibonacci extensions on the 2025 uptrend projects $7,000 per ounce. That would be a 50% plus gain from current levels. For silver, Bank of America has a target range of $135 to $139 based on gold-silver ratio compression. Citigroup set a target of $150 to $170. From current prices, around $77, that is a potential double or even triple. These are not random YouTube predictions. These are major financial institutions with billions under management putting out official price targets. And the fundamentals have only gotten stronger since these targets were published. The bear case deserves honesty too. Higher nominal interest rates can pressure gold in the short term. Solar manufacturers may thrift silver usage. Tech stocks could keep running for a while longer. But gold does not care about nominal rates. It cares about real rates, interest rate minus inflation. Right now, with oil shocks pushing inflation higher, real rates remain low or negative. That is rocket fuel for gold. Silver has an even tighter supply dynamic. Over half of silver demand is industrial. Solar, EVs, electronics, AI data centers. Silver mining is mostly a byproduct of copper, lead, and zinc. When those base metals slow, silver supply slows too. We are already in the 6th year of structural deficits. Above-ground inventories are being drawn down fast. The bear case may win the next 90 days. The bull case wins the next 10 years. That is the trade. Here is what April 8th, 2026 actually looks like when you read past the headlines. Gold and silver refuse to sell off on ceasefire news. China continues dumping treasuries for physical gold. COMEX and Shanghai inventories keep tightening. The 53-year gold pattern is breaking out. Silver is breaking out against the Nasdaq. Central banks are buying. Industrial demand is structural. The paper market is disconnected from physical reality. This setup is rare, once or twice in a lifetime rare. The ceasefire is a fake-out. Gold and silver know it. China knows it. The smart money knows it. Now you know it too. Drop a comment telling me your price target for gold by year end. I read every single one. This has been the hidden economy. If this video opened your eyes, smash that like button and share it with someone who needs to see it. I'll see you in the next one. Peace.